Here we've got an asset that outperforms everything, that is basically tokenization of a technology, which is blockchain technology, that we can all participate in. And it is one of the great ways to unfuck all of our futures. And it moves so far and fast that it really makes a dramatic difference, even if you start with small amounts. So that's basically the backdrop of how I think about this.
Yeah, so, and it also feeds into your, I guess, your wider thesis around the exponential age and how we have, I mean, you can describe this far better than I can, but intersecting technologies or major secular trends with blockchain being part of that. And I think we'll circle back to talk about blockchain in just a little bit, but I want to touch on this because one of the things that you've put out in the last maybe 12 months has been this sort of, this time frame that you've thought about where you think in the next maybe 5 to 6 years, things will change so dramatically that it's almost impossible to forecast beyond that point because of what's happening in terms of technological adoption and the types of technologies that are coming to the fore. Maybe if you could just touch on that. Now, obviously, we're talking about AI plus other things, but do you want to just give everyone here that distillation of that exponential age thesis?
Of course. And it's very important for people to understand this. The exponential age was something I came across, and I wasn't the first person to think in these terms, but I kind of started putting it in a macro framework, which is that we are living in an age where a bunch of technologies that are completely game-changing are all hitting network adoption at the same time. So network adoption is when the networks start going exponential as new people use these technologies. Now, we've seen that in the past. We saw it with mobile phone technology. We saw it with the internet. We saw it with home computing. Stuff like this we've seen, but we've never seen a nexus of maybe 5 or 6 of the most important technologies of all time all happening at the same time. So blockchain is one of them. It's a foundational layer. It's the truth layer to the internet. We can come back to all of this later. But AI is the big one. AI gets around a fundamental human issue, which is knowledge is scarce and is priced accordingly. And AI is infinite human knowledge. But it's not only human knowledge, it's going to become inhuman knowledge. Because currently, the leading AI models have an IQ of about 120. That's higher than the average person. But in every single subject known to humanity. Now, unlike Moore's law, which sees the power of chips doubling every 2 years, it seems that computer intelligence via AI is doubling maybe every year. So what we're getting is Moore's law doubled in this exponential rise of knowledge. So what it means is currently we're at an IQ of 120. By next year, we'll be at 240, then 480, then 1,000. This becomes la la land because what we've scaled is infinite knowledge. Now, we also have robots coming in, and robots scale infinite humans. Now, this is all well and good. We've got infinite knowledge, which replaces knowledge workers, but we've got an aging population. So it's kind of offsetting some of the aging population. It's kind of desperately needed for economic growth. And I'll come back to that in a sec as well. And then we've got the robots. The robots replace physical labor, and they're more productive than us. We add in new forms of electricity production, and that generates a flywheel along with compute. And then we can add in genetic sciences. And there's a whole bunch of these technologies that all come together at the same time, hitting mass adoption. Blockchain was the fastest adoption of any technology the world had ever seen. It was twice the speed of the internet. It continues at that speed today, vastly outstripping the pace of the internet in adoption.
Recently, Raoul Pal shook the cryptosphere with yet another wild and bullish prediction detailing how Bitcoin's value will catapult to as high as $400,000 by March 2022, with its fellow digital currency, Ether, soaring to $20,000. Known for his dramatic pivot from Wall Street to the volatile crypto arena, Pal's predictions have gathered attention and skepticism. Yet his strategic allocation of investments, with 55% in Ether alone, speaks volumes about his conviction. Welcome back to Investocracy Crypto.
How do you invest in anything when something is a smarter investor? It can see the patterns we can't see. It knows everything. Well, that kind of changes the game for us as investors. How do we generate and accrue wealth? We've done it via owning assets. Sure, physical assets like real estate, they won't be driven by the AI and the robots. But the financial assets that we trade on screens all day, well, that game becomes different. But also building a business becomes phenomenally difficult. Think of the world driven by software is eating the world, the famous Mark Andreessen quote. Well, software, this SaaS business model that we've all grown up with that's generated so much profit, now I can just show an incredible platform like Real Vision and show it to a superpowered AI and say, build me this, and it can build it in 3 minutes. So what is the moat to any product? Yes, it's community and it's humans, but outside of that, any business becomes a factor of attention. How long can that business get an attention before a new business comes along? It feels like the initial coin offering, ICO market of 2017, or even the meme market now. Velocity of capital becomes super high. The wealth creation destruction cycle is so rapid that IPOs, VC, private equity, none of these things work in the 2030s. So we're going through this profound period of change where first we're going to get this super acceleration of productivity, of asset prices, something we can really participate in, beyond which it becomes a very dark world I call the economic singularity, which I don't think of as a pessimist. I don't know what this means for us and how we're going to figure it out. So I kind of figure out we've got 5 or 6 years to unfuck our future, to solve the issue that we don't know what even the study of economics means in the future, what financial markets are, what assets are, what businesses are. So it's the period we need to really focus on wealth accumulation and to try and make as much money as possible. You'd rather go into this with your lifestyle covered, your future secure, and then we can figure out this complicated future. What I don't want to be doing is figuring it out while launching a new business in the early 2030s and everything has changed. So, it's kind of, we can see it ahead, like the steel mills in Sheffield in the UK or Pittsburgh in the US. We can see that these things are going to be closed down. We can see there's immense opportunity before it happens. So that is the ride we're on. And this is one of the key things for crypto that I try and tell everybody. It's like, I don't care whether you believe in, the libertarian angles. I don't care whether you believe that the technology is not for you. What you need to believe in is your future, and this is the only opportunity you're going to get to do that in this period of time.
In a candid revelation, Pal divulged that a massive 55% of his holdings are now in Ether, leaving only 25% in Bitcoin, with the remainder in assorted digital assets, often referred to as DeFi tokens and Ethereum killers. This radical shift reflects more than just a personal gamble. It's a strategic alignment with what Pal describes as a burgeoning demand for the shrinking Ether supply.
This is not just Bitcoin and a pristine collateral layer. It's not a bunch of cryptocurrencies that people are trading. What this is, this blockchain technology, is the security truth layer to the internet. Without it, the internet cannot progress with AI. AI, we're bringing in something we've never had before, non-human activity. Non-human activity and human activity will need to prove what is what and who is who. But also, as we go increasingly digital, every day is more digital than tomorrow. Tomorrow is always more digital than today. Everything from every contract that we do, all of this stuff, and humans live by a system of contracts, whether it's tickets, agreements, everything, even me turning up on the Zoom call today is a contract. All of these contracts, some have value, some don't. The ones with value are generally done via paper and some sort of ledger system of which somebody notarizes it, if you think about a property. But what we're moving towards is a way that we can do this digitally in a way that is trusted because there's no central party in the way. And so this scales everything from ticketing to value to artwork to money to everything. This blockchain also proves who is a human, who isn't. So we can prove these things. It's a proof layer that is distributed amongst thousands or millions of people that confirm what is the truth as opposed to one trusted party. So this scales as AI scales. It has to. Without it, we couldn't have AI or we would entirely break society, money, and everything else. So even if I just take the trend rate of adoption, I think you've got this chart. The trend rate of adoption of wallets keeps increasing every day as new people start to use this. Now, as I said before, I've compared new wallets to IP addresses. I rebased them in the past back to 5 million as a starting point for the internet. It was at 92, 93, and I did 5 million wallets for crypto. Now we've all got multiple IP addresses, we have multiple wallets, so it's pretty like for like comparison. You extrapolate that out, by the end of this year, next year, we should get to about billion wallets. Okay, that's a lot.
In stark contrast, billionaire John Paulson offers a harsh rejoinder. His perspectives echo those of a cautious scholar observing a speculative frenzy. According to Paulson, cryptocurrencies represent a limited supply of nothing, starkly reminiscent of his profitable skepticism during the 2008 housing bubble. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
So what does it mean for all of us? Really simply, this is a $3 trillion industry today. It is going to 100 trillion by, let's say, 2034. 100 trillion from 3 trillion. Maybe I'm wrong by 50%, and it's a $50 trillion industry. If it's 100 trillion, we're only 3% of the journey. So all of you who say, oh, should I be buying Bitcoin so high, or Solana, or Ethereum? 3%. It is going to 100 trillion or 50 trillion. It'll be the largest accumulation of wealth in the shortest period of time the world has ever seen. It is a mass redistribution of wealth. It ties back into the earlier conversation we're having. The reason it's a redistribution is savers are being penalized and workers are being penalized by a financial repression via the debt. That debt is a factor of the aging population. Nobody had kids. It was a function of World War II. We can blame governments all we want. It's actually a function of World War II populations and a bunch of other stuff. But the point being, in front of us lies the largest wealth generating opportunity of all time. And we're only 3%. If you just think of a little scale, and we're 3% of the scale, and all of that is blue sky. That's what we've got ahead of us.
Despite John Paulson's dire warnings, the crypto market seems to trudge forward with a rebellious twinkle. As Bitcoin and Ether teeter on the edge of groundbreaking valuations, their potential growth remains a hot topic among investors. Enthusiasts argue that the current Ether supply dynamics position it for a price surge, while Bitcoin's historic patterns suggest another bullish rally might be on the horizon. But what do you make of all of this? Share your thoughts. And finally, if you would like to know more about cryptocurrencies or specifically Bitcoin, go ahead and click on the next video on your screen. See you there.